Welcome, latest Motley Fool scoreboard. I'm Anand Chakavalu, and we've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to the bank I first knew as Crestar 3 decades ago. And I still slip and call it SunTrust. The SunTrust has since merged with BB&T, and it's now Truist, ticker symbol TFC. There's a lot of consolidation in the bank space all around over the years. First, we'll rate the strength of Truist business, including factors like its industry and its competition. A 10 is invincible. A 1 is hopeless. Jason's at an 8. Matt, you're at a 7.
Yeah, Truist is one of the largest regional banks. Now that Capital One and Discover merged, they took that title as the largest regional bank. It was formed by the merger of BB&T and SunTrust, and as Anand said, there were a lot of predecessor companies to both of those. I believe it still stands as the largest banking merger in the post-financial crisis era. Mm-hmm. Banking is a very competitive business, but switching costs are high, not money-wise, but just in terms of effort. Wells Fargo literally scammed millions of customers and didn't lose customers. It's really hard. It's easy to keep your customers once you've built a customer base. And Truist does a really good job of feeling like a community bank while still being a big bank. One of my favorite things about the company is their concentration in the Sunbelt states, like areas where I live in. Generally, Truist states are areas where there's positive net migration, positive above average job growth, above average wage growth, really attractive markets for growing a bank even bigger. I wouldn't want a bank that's based in states where people are moving out of. I want one that people are moving into. Loan growth is weak right now, but that's an industry-wide thing. But the bank is really doubling down on pushing consumer loan growth, and it's working so far. So I give it a 7, but mostly because of the industry conditions, not because of anything SunTrust or SunTrust. I'm doing it too. Anything Truist is doing.
Matt, the only reason I rated it an 8 versus a 7 is because of those things you were talking about, the migration trends, the demographic trends in the Sun Belt that are just so positive. It's the same reason NextEra Energy is, if you're looking in the utility space, so compelling, is there's so many things that are just driving growth towards it. If we were talking PNC or M&T Bank, I'd rate it a 7.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Jason's at a 7, Matt's at an 8.
Yeah, we flip-flopped our scores on this one. I gave it an 8. Bill Rogers is the CEO. He was previously ran SunTrust. I really can't argue with how SunTrust did. I mean, he was a great leader over there. There's a reason they chose him to be the leader of the combined bank. Very impressive track record of growth and leading banks through a variety of economic conditions. I think they have the right person in charge here.
Yeah, I think that's right. The only reason I'm not higher is Truist loan book is a little heavy in two things that I think management could have done better with, mainly the pretty large collection of mortgage-backed securities at lower yields that weighs a lot on returns. That's something that management's driving that specific decision to invest in, to own those kind of assets. And then the commercial loan book, again, it's not entirely management because a lot of times it's who's coming in your door, who's going on your website looking to borrow money. But again, something with their strategy that they could have affected. And that creates a little bit more risk. But again, we're kind of nibbling around the edges here. This is a really good management team.
For financials, a 10 is a fortress, a 1 is yikes. Jason and Matt, you're both at 7s, Matt.
Yeah, I mean, there's a lot to like financially. Their net interest margin's a little over 3%, which is better than most big bank peers, other than companies like Capital One that focus on credit cards. The efficiency ratio of below 60% is what I like to see in a big bank. 12% or a little greater than 12% return on tangible common equity. That's something else I like. Over 10% is really what I like to see. It's a well-capitalized bank, a lot of liquidity. They're very opportunistic with stock repurchases and get aggressive if market conditions allow them to do so. Great asset quality for the most part. Net charge-offs are at about 6.6%, which is in line with peers. And considering some of the types of loans Jason mentioned, the commercial loan exposure, that's 51% of their entire loan portfolio, although office property exposure is low, and that's really what you want to look for.
Right.
And there's a lot of on-paper losses in the held-to-maturity loan book, which is common among the banks right now with the interest rate environment. But that's really why I gave it a 7 and nothing higher.
Yeah, that's a really good point. Like a lot of those assets, if they marked them to market, it would change the book value pretty quickly, right? And it wouldn't be as cheap as it looks like. But there's no reason for the bank to have to sell those assets at a discount, so it can continue to hold them until they're either paid off or until the customer refinances. So, not a lot of concerns about that. My biggest thing is that commercial book is probably fine. If you think about the yield, it's a high yield. It's a little bit of a yellow flag as much as it's a benefit because it's so much above a lot of its peers. But there's really not a lot of reason to be concerned comparing it to most well-run banks of similar size.
Valuation time, Jason. How well will Truist stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
So I think it's pretty safe. It's pretty safe for a bank, but it's a 6 because it's a bank. So the cyclicality can make a big difference. We could 5 years from now, if we're in the throes of a recession, the stock could be in the dumps, right? So that's just one of the risks of owning banks. But I think probably the more likely case is probably the lower end of 10 to 15% in total returns. Half of that is going to be in your dividends. You have a management team that's willing to buy back stock when it's cheap. That creates per share value. That would grow earnings per share. And it's a pretty low threshold to grow earnings per share. Mid-single digits can get you to 10% total returns pretty quickly if the valuation just stays where it is. I think there's some chance too, Matt, you'll probably agree. If we do see interest rates start to come down, valuations for financials writ large and dividend payers will move higher, and that could boost returns as well.
Yeah, I would say the high end of that 10 to 15% range if that happens.
Yeah, exactly.
So I also said the 10 to 15% range mainly because of the positive tailwinds I see for the sector over the next, say, not even 5 years, but the next 2 to 3 years under the current administration. We keep talking about a corporate tax cut, which isn't included in this year's bill, but the president campaigned on a 15% corporate tax rate. Most banks have relatively high effective tax rates, so that could be a benefit. I see the general direction of interest rates is lower over the next 3 or so years. That would be a pretty big tailwind for the banks. For safety, I gave it a 5, even lower than Jason. It's a cyclical business. That loan exposure kind of could turn really sour in the wrong conditions.
Top of time, Jason, is there a company in Truist space you like better?
So in true Jason fashion, why do one thing when I can do two? If I'm looking for value in banking, I can't help it. It's just what I do. But if I'm looking for value in banking, I'm going to look at Access Financial. There's not a dividend, but this is a proven banking business and a wonderful long-term compounder. Now, if I'm looking for a high yield and a turnaround, a little bit of a turnaround here, take a look at UPS. I think there's something compelling there.
Yeah, I'd say Truist is my favorite regional bank. But my 3 favorite bank stocks, I'll give you I'll do 3 things, not just 2. Bank of America is my largest bank stock position and still my favorite big bank to buy. Ally Financial, I would call it my Axos. It's like my portfolio's counterpart to Jason's Axos. And SoFi is one of my larger bank positions right now. So I do, if you're going to buy a regional bank, Truist is a good one.
Just to be clear for folks, Jason, did you say UBS, the bank, or UPS, the FedEx competitor?
United Parcel Service. What can Brown do for you? It can put green in your portfolio.
Beautiful. Thank you to both Jason and to Matt. They've given Truist a solid overall score of 7.0 out of 10. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Vici Properties. Till then, Fool on.
DMs, Twitter DMs.
Twitter what?
DMs, private messages on Twitter.
DMs. Yeah.
You're really struggling with acronyms right now.
I could swear you said UBS.